ARENA is a top 300 ASX listed entity with a market capitalisation of just under $500 million. We invest in and own and manage social infrastructure style assets. We currently own a portfolio of childcare and medical centres. About 200 of those centres are all situated around Australia. When we talk about social infrastructure assets, that includes things like police stations and hospitals, those sorts of assets, and generally they're on long lease structures. ARENA's performed very well since it IPO'd in June 2013. We've delivered an average annual return of about 33% per annum. We announced a statutory profit of $72.6 million. That was largely driven by some strong revaluations across the portfolio. Property market's been pretty strong, as you may be aware. And if you take that out, it brought our net operating profit back to about $25.6 million, which in a more meaningful way reflects about 11.1 cents per security. And based on that earnings, we then distributed 10.9 cents per security through to investors. And that delivered about a 9% growth on the previous year. Combination, I guess earnings was really driven by three things. We had strong rent reviews just across the portfolio. Well, I think we delivered something like an average of about 3.6% per annum like-for-like basis. We also have a development portfolio, and we've been developing good high-quality childcare centres around Australia, and that sort of added to our earnings. And lastly, we had the benefit of lower interest rates across the market, and we're also able to negotiate lower margins over the period. The childcare market's a fantastic market. There's a shortage of childcare. There's a Productivity Commission report which was done sort of some 18 months ago, sort of estimated there was a shortage of about 50,000 places in Australia. And demand for childcare is really driven by not only the number of kids, and the number of kids has been growing, but also the participation of number of kids in long day care has been growing as well. And also the number of hours they've been spending in long day care has been increasing. So that's all contributing very strongly to demand. Yeah, healthcare, well, we're all getting older. And as we get older, we need better quality healthcare services, and that gets back to fundamentally the assets we've invested are actually in medical centres, multidisciplinary medical centres with primary healthcare, and that's really driven by a bulk billing sort of model, and that becomes a centre. And when you go to those GPs, they might refer you to pathology or blood tests, what have you, and there's a number of services that flow from that. We do have two unlisted funds, which we manage on behalf of I think about 50 high net worth investors. Those assets are actually invested in healthcare as well, primary healthcare assets, and they've done very, very well, and we just want to continue looking after those investors. Yeah, it's been an incredibly strong property market over the last couple of years. We've chosen to focus on development. The reason for that is we can pick the site, we can pick the tenant, we've got the right lease structures, and one of the good things about ARENA is the underlying lease structures are very solid, the triple net leases. So we get to choose that, and then we also make a development profit and development margin off those developments, which has driven our earnings. We've announced to the market in our results last month that we'll be distributing this year 11.7 cents per security. That's a growth of around about sort of 7% on last year, so it's good growth. That's on top of the income yield that we're delivering at the moment, about 5.5% to 6%. If I look forward for the next 12 months, hopefully we've completed some developments. We've had some good outcomes on rent reviews. We continue delivering on what we've been doing over the last few years. So nothing really more than what we've been currently doing, but hopefully just progress the story a bit further.